I'm Manju Ganeriwala, and with trustee Lara Abrush, I serve as the co-chair of the FAFS Standard Setting Process Oversight Committee. I'd like to welcome our stakeholders observing today's meeting. And before we move on with our agenda, I want to remind everyone of our due process correspondence procedures and form, both of which can be found on the FAFS website. As previously expressed, these measures are meant to make it easier for stakeholders to raise potential concerns about compliance with the due process procedures of the FASB and GASB. Also, I want to direct our listeners to the agenda and meeting materials for this session. If you haven't already clicked on them, they can be found on our FAF website under the Meeting and Events Calendar subsection. So now, moving on to today's meeting agenda, the committee will cover the following items. We'll first hear a GASB report, FASB report, FASB liaison to the PCC report, PCC meeting observations report, and other meeting observations reports. Let's begin with our first topic, GASB Chair Joel Black. I'm going to turn it over to him. Joel.
Thanks, Manju, and thanks to the committee. Great to see everybody. As always, we really appreciate your insights and oversight of our process. I'm going to start on master page 40, some highlights for the second quarter for the GASB. We issued our implementation guide update for 2025 back in June. We'll cover that a little bit more a little later in the presentation. Additionally, the comment period ended on our preliminary view document that was out for due process exposure on our project related to severe financial stress and probable dissolution disclosures. We will talk about kind of the due process to date on that project in a bit. Finally, the main change in our agenda relates to the addition of pension and OPEB disclosures under concept statement 7 pre-agenda research item that maybe I'll highlight when we get to the overview of the agenda. The other two highlights for the quarter are not something that will come about later in the presentation, but wanted to highlight, and that is we spend a fair amount of time at the GASB over the year presenting at conferences and the kind of the education part of our mission to help our stakeholders understand and utilize and implement our standards in the second quarter. And most of that, those presentations come at conferences. Well, the second quarter of the year tends to be the busiest conference presentation time period. And in the second quarter, we gave 50 different presentations at 50 different conferences. Actually, it's 50 different conferences. Sometimes it's multiple presentations at each of those conferences. And we reached over or almost 13,000 stakeholders during the second quarter at those 50 presentations. So a lot of good outreach by our team, and we are grateful to the conferences for having us, but it's also a real benefit, I think, to the stakeholders and to us, because it gives us a chance to interact with them as well and get feedback and thoughts and hear the questions that they have. So it's helpful to us too, but it certainly, I think, is helpful for them to be sure that they're hearing about the changes that we proposed and the things that they need to implement. Final highlight actually is a third quarter item, barely, because July 1st was the start of Robert Scott's term on the board. So we were really excited to have Robert on. He spent the second quarter onboarding, we got him up to speed on the projects on the agenda. Robert certainly isn't unfamiliar with us, having served on the GASAC for a number of years, including being its chair up until 2021. So he was pretty up to speed, but we certainly made sure that he was up to speed during the second quarter, and we're excited for his term to start back in July. So moving on to the overview of the technical plan on master page 42, you can see us roll forward from the end of the first quarter to the end of the second quarter. Not a lot of changes. You will see 2 additions and then one final document being issued. The addition in the practice issue projects, the addition in the final document issue is just the implementation guide. The implementation guide being issued because we issued the 25 update, as I mentioned a minute ago. The addition is just that we always are considering an implementation guide. So, trying to start the process to see, do we need a 26 update to the implementation guide. So that's the addition there. It goes in and out at the same time, so to speak. When one issues, the next update begins, and determining when we might need it. The other addition, the pre-agenda research, was something I mentioned in the highlights. This is us following through on our commitment when we issued Concept Statement 7 to revisit existing note disclosures through the lens of Concept Statement 7. As a reminder to everyone, Concept Statement 7 better described the characteristics an item of information should have for us as a board to require it to be a note disclosure. It says that item should be essential to the users, and essentiality is really better described in Con 7 as a breadth or depth of users would use it and have a meaningful impact on their decision making or accountability assessment. So any standard that we've issued since June of 2022 when we issued Concept Statement 7, and all the projects that we have ongoing, and you'll see a highlight of this in a bit, where disclosures are contemplated, we go out and talk to users. We survey users, we interview, research with them. Would they use this item of information? If so, how? We bring that information back to the board. The board uses its judgment and says, does this rise to the level of essentiality as described in Con 7? So anything new we're contemplating goes through that, but that doesn't help with some, at this point, a little bit dated, but maybe 10 years ago, pre-agenda research we did on note disclosures that said there's a lot of volume there. Maybe they're too voluminous, but the beginning of us trying to attack, okay, how do we reduce the volume, was the Concept Statement 7 project. And so now we have this commitment that we've made to take all existing note disclosures in a way that makes sense through this lens of Concept Statement 7. And the most voluminous note disclosure we have are the pension and OPEB note disclosures. And so we have decided to kind of take those on, and we added that to pre-agenda research. So that means that over the next 17 months, probably, we will be going out to users, talking to them through surveys, through interviews, about how they use each of the existing pension and OPEB note disclosures, accumulate all of that information, and bring it back to the board for the board to then determine, do we have a project, a standard setting project here to undertake that might remove some of those disclosures if any of them don't seem to rise to that level of essentiality. And if the outcome is we don't have a standard setting project, that means we have a lot of evidence that shows our stakeholders and preparers, who sometimes will say, people don't read all this information. There's a whole lot of information in here. We'll have evidence that says, no, for pension and OPEB disclosures, here how they use each of those bits of information. So either way, I think we've got a productive outcome from that research. So we did add that and have begun that pre-agenda research. So then let's go through kind of each of the projects and the range in which they are. Master page 43 has our one comprehensive project, which is our revenue and expense recognition project that has been going on for some time. But it's a really broad project. We really want to get it right and be sure that we provide the improvements in the guidance for both exchange and non-exchange transactions that the project's objectives hoped we would achieve, but do so in the simplest and easiest to explain way possible, include lots of illustrations. And so we're taking our time and working our way through that. We've already gotten through all the category B, or kind of what's currently thought of as non-exchange transactions. And we're working our way now through the category A, which are exchange transactions, which is really a lot of new guidance and considering the performance obligation model that FASB 606 implemented and how that works in our environment. And we're working our way through that. Second quarter saw us really going through a lot of how performance obligations are satisfied for various types of category A transactions, and beginning our kind of first deliberations on measurement and how you measure those items once they're recognized. So good progress continues, but it's a big project, and we will keep moving it forward. Next on master page 44 are what we consider our major projects. We have two that are on pretty similar tracks. Both have now gone through a preliminary views document for exposure and are moving then into the next phase. The infrastructure asset project, we talked about that due process with you last quarter. The redeliberations began in early April. In particular, in the second quarter, we've made some, I think, clarifying edits or improvements based on the feedback we received on the definition of infrastructure to make sure it's clear as we're bringing it forward. And then we went through the large recognition and measurement concepts, largely bringing those forward as was in the preliminary views, although I think we did make a couple of tweaks to try to improve the cost benefit of, in particular, the componentization requirement that we were proposing to add as part of this project. So that project continues on track, on schedule, making progress. We would expect an exposure draft in early first quarter of 26 would be our next step. And the rest of this year will be spent redeliberating the disclosure items and the feedback we received there, and then drafting the exposure draft and going through that. Second major project is our going concern uncertainty kind of umbrella project that resulted in a preliminary views being issued towards the end of the first quarter, entitled Probable Dissolution and Severe Financial Stress Disclosures. The comment period was over 90 plus days. It ended right on the last day of the second quarter, June 30th. We did receive 38 different comment letters. On the next slide, I'll go through a detail of that, but did want to highlight that our public forums began in July, and that term might be a little different than what we've used in the past, because this, for our larger projects like these two, infrastructure and going concern, what we have routinely done in the past is have public hearings where preparer and auditor stakeholders come to us individually as a board and dialogue with us for about 30 minutes about the items in their comment letter. And we get more information, and those were productive. And then we had user forums, which were roundtable type formats where different users would dialogue with the board about their views about our proposal. We've decided to maybe mix those up a little bit with the Going Concern project and create public forums, which, similar to the user forums, roundtable type discussion with multiple participants with the board, but now we're integrating all of the participants so that at each public forum, we have some preparers, some auditors, and some users. And so those began in July. We had one in July. We actually had one a week or two ago in August, and we have at least one scheduled for September. But I think that new public forum format thus far has been very well received by all involved in it, from the board perspective as well as participant perspectives of those that participated in it. So with that, let's go to the next slide and highlight the due process so far on this project. And you can see by type and different type of outreach where we've interacted with stakeholders kind of since the beginning of this project now through really probably early July is what this includes, because it does include the first public forum. I think the interesting thing to highlight, and you saw this, I think, last week, especially on the subsequent event due process summary, where you see concept statement 7 in effect, because this project by nature, there's no accounting, there's no debits or credits in this project. It's all about disclosure, the note disclosures that might come out for governments that find themselves in a severe financial stress or probable dissolution item. So that means you see a lot of outreach to users about the disclosures we were contemplating as it relates to this project. So on the second line there, the surveys, and then the fourth line there, the research interviews, those are large gray bars. Those are all user interviews and surveys we did related to the outreach on the disclosures. So that's Con 7 in process. And sometimes users aren't really apt to provide comment letters to us, although in this case, we did receive a number of comment letters from users. In fact, I think we received 11 user comment letters that on this slide has a few more than that, because on this slide, if 2 or 3 sign the letter, we count each of them as a separate identifier, even though it's just one organization and one letter. So if you added those up, you'd get more than the 38 comment letters that I had on the last slide. But they did participate here, but I think it's good to see concept statement 7 in effect here. But you also see that the auditors certainly very interested in this project because of the interplay of the going concern audit standard literature with the accounting literature that we are contemplating changing as part of this project. So we've been very engaged with the auditors. ASCPA has been very interested in this project. In fact, we're scheduling some meetings with members from the Auditing Standards Board to continue that discussion over the next month or so as we push towards an exposure draft being the next scheduled phase of this project, which would probably, timeline would say, should be released in the second quarter of 2026. And so maybe I'll pause there and see if there are any questions before turning it over to Alan to move on with the rest of the agenda. Rick.
Hey, Joel, on the implementation guide. So as a practitioner, I can tell you the implementation guides are always great. They're always very helpful. And they are GAAP, right? How do you determine how many questions to gather before you issue, say, a 2026 implementation guide? I mean, how does that process work?
We're constantly accumulating questions, right? Sometimes it will come from questions that came in through the process of doing the 2025 guide, but they come in after we've exposed it, so we can't add them. But it's additional things, people that were prompted from some of the questions we were able to answer, they would say, what about this situation? We say, well, that's a good thing for maybe the next guide. It comes from GASAC. It comes from our interactions at conferences. It comes from our technical inquiries and questions that people ask us. We have a kind of a parking lot on our internal web SharePoint that is accumulating these questions, and teams are doing it based on the TI kind of assignments they have, and we have a central way to accumulate those. And then it kind of comes down to, once we kind of hit the summer, we start thinking about the next year's update to the implementation guide, and we look at that parking lot and we kind of go out and say, hey, this is the time to tell us if you've got any questions. And it's really not about a specific number, because it could be a few questions, but if they're important or significant enough, we'll issue an implementation guide update with only a few questions. But if we've got a few and they kind of seem not as important, we might just wait and hold until we get a number more. So a little bit more art in determining that when we hit that trigger. But certainly we think about both number and significance of the things we're considering.
Okay, thanks.
All right.
Any other questions for Joel?
I'll turn it to Alan then to keep
yes,
going on our
you.
practice issue projects.
Thank you.
Thank you, sir.
Thank you, Joel.
Thank you, Manju. If you look at slide 46, 2 things on there. Number 1, subsequent events. That's a product we're just trying to clarify some language in that topic within that standard. We've gone through the due process. We're going through deliberations. They're going pretty smoothly, to be fair. I hope I didn't just jinx us, but we're on target to have it done by the end of the year, and I don't really see right now any reason why we wouldn't do that. Joel mentioned the fact we issued the implementation guide in June. We are talking about 26, and Rick, to your question, the thing we're talking about 26 right now is an example where it's not about the number of questions, but the quality of questions, because we're thinking about maybe doing some questions related to subsidies. That's in statement 103, because that's a new concept related to proprietary funds. And that might not be a lot of questions, Rick, but the timing of getting those questions out there might be really important. And so that might be a scenario whereby we might not have a large number of questions, but we have 3 or 4, 6, 8 questions that we really believe need to be answered on a timely basis. And so we might be doing an implementation guide just related to statement 103 and just related to subsidies. So the next time we do this, if you still see 2 projects there, don't think we forgot to take one off. We just replaced the IG project that we issued with a new IG project that Joel kind of alluded to a minute ago. If you think about our main technology project, as we like to call it, our voluntary digital financial reporting project, or our taxonomy project colloquially, we have a consultative group formed. We think that's really nice. And then there's a slide, we'll talk about the construct of that in a minute. We continue to take information to the board and get the board feedback on, modeling of the government-wide statements, including reporting entity and determinations of that. And we're going to have even more conversations with them in September. So we continue to go to the board and bring papers to the board and get the board's input. As I think Joel mentioned earlier, we do update the SEC. We updated the SEC back in March. I think that's something we have continued to do through this whole process and something we will continue to do. And there is a due process document, planned for the fourth quarter of 2025. And I say due process, I don't mean that from a standard setting perspective, but I do think that while this isn't something that's going to create new gap and new reporting requirements, because it obviously is voluntary, it is something that we want to make sure that we do give the broader stakeholder base the ability to have input into and have discussions into. And so we'll issue what we call a discussion memorandum, which is kind of a different word. You don't hear us use that word a lot because this isn't a preliminary review or an exposure draft or a final statement. And those words have very particular meaning within that context of standard setting. So we will issue a discussion memorandum, which basically is saying, hey, here's what we're thinking, here's where we're going, and give us your feedback, give us your thoughts. And so we plan on doing that in the fourth quarter of 2025. And there's a slide in a minute we'll get to that'll kind of give you an idea of what the scope and what will be included in that document. And so if you look at the next slide, on Master Slide 48, you'll see the Taxonomy Consultative Group. We've got 19 members on it right now. I think at the end of the day, we'll probably have 25 members. But we've got 19 members. The pie chart there will show you the distribution of the composition of the group. It's almost perfectly even between preparers and auditors and users and technologists and others. And that's intentional. That's on purpose. And we was intentional with that. They did meet for the first time in July. It was virtual. From what I understand, that meeting went very, very well, and it was very well attended. And I think it had participation from folks in every one of those pie chart graphs right there. So we had good participation on that. And we're going to get periodic feedback from folks on the technology, how the structure and the technology of the process is going, and also common practice. Common practice is one of the things you have to deal with in this taxonomy, because it's not one thing to say, hey, tag your capital assets or tag your capital assets. It's like, okay, but how many different types of classes of assets do people report? And do we need to know that we can actually provide those different types of common practice for those line items, also for capital assets, buildings and infrastructure and software? And how many of those lines do we need to predefine, for lack of a better word, in the taxonomy? And then again, we're periodically going to take and meet with the board. This group and this project will meet with the board periodically, and we're going to have the board meet with the consultative group at least once a year. And that first time that's going to happen is the fourth quarter of 2025. And we're really looking forward to that. And I know the board is looking forward to talking to this group. If you go to the next slide, on slide 49, what you get here is, I come back to this graphic a lot, and it's a little overwhelming at first, but what it really tells you is, in a graphical sense, these are all the pieces of a puzzle that we needed to do for phase one. And phase one being, remember, that's just GASB GAAP. That's the first thing we're focusing on, is just our GAAP, nothing more than just our GAAP. So statements, reconciliations, RSI, notes. Each box represents a certain individual thing. And the ones that are highlighted right there in light blue are the ones that we tend to have in this initial discussion memorandum in the fourth quarter of 2025. I mean, obviously that means there's more to come. There'll be potentially other memorandums to be issued as we fill in the rest of these boxes. And I kind of use this graphic to say, as more blue boxes show up on this graph, we're closer and closer to having everything done. But it's also important, if you think about that, the government-wide statements, the fund statements, pension OPEB disclosures, MD&A, the architectural design. Those are things you really want to give people a flavor for early on in the process to make sure that they can provide feedback on that. Because if you waited to fill in all these boxes, and then let's say someone had some discussion around the architectural design, it's almost like you're building a house and you got to redo the foundation. So you want to make sure you get some of that stuff right early into the process, and we get feedback early in the process. And so that's really what we're going to do with the discussion memorandum. But this is good for me just in terms of what all we have to do, but also what we've already done. And so mentally, I continue to go back to this slide a lot. If you focus on our pre-agenda and other research activities, there's 4 things on here. I'll cover all of them a little bit. One of the research activities we've been doing is cybersecurity risk disclosures. And it's funny, if you have a topic, at least with our GAS Act, for instance, that you want to bring up and you want to have really robust conversations really quickly, just say the word cybersecurity. And you almost don't have to say anything else, and everybody just starts talking. And it's interesting, too, because it's one of those where the users would definitely say they want to know information about it, but then the preparers say, you know, the government say, please don't put targets on our back and please don't ask us to disclose something that will make that actually will make us that will provide more risk. I would say that the board's aware of that. I would say the staff is aware of that. I would say that we're doing a lot of conversations with users right now, or preparers right now, and with auditors right now. And we're just trying to do the research. We're just trying to figure out what exactly does exist in the environment, how often these cyber attacks happening, what type of cyber attacks are happening, what disclosures governments are either required to make, let's say with NIST at the federal level, and or what disclosures they're making in OSs, like what's happening in our environment. And really that's part of what the research is trying to decide. And then ultimately, which we don't know this yet, ultimately decide, is there a place to do cybersecurity risk disclosures within the context of accounting and financial reporting within GASB GAAP? We don't know that answer yet. And I try to remind people that just because we're doing the research doesn't mean we think there is a path forward in terms of doing a standard setting project. The research is trying to figure that out. And so it's a very, 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 it's a topic that causes a lot of conversation, but I actually think that's good because the more conversation we do now, we can decide is or is there not a path forward on this topic. And so we will continue to work on that. We're trying to work on that for the rest of this year. And then we'll bring something to the board that says, here's what the research showed. And do we want to move forward the project or not? But as Joel knows and the board knows, there's been other research projects that we do that don't actually end up with a standard setting project. And that's okay. That's part of the process. And so that's kind of where risk disclosures is. Joel mentioned pension OPEB disclosures in concept statement 7. I don't think I probably need to go over that again. He mentioned that. The revenue expense note disclosure is just really asking the question, do we need note disclosures in the RER project? The RER project typically right now in scope wouldn't have additional note disclosures. It's just a question. In other words, just research again. And then gap structure is really our process of going through the fact that many people may know this. We have different sources of gap for us. We have our statements and we have our COD. And you know, unlike our FASB brethren just says that their COD is their one authoritative source of gap, we have multiple sources. And so we're asking the question, does it make sense for us to have multiple sources, or should we just have a single source? And so we're working through that. And we don't know the answer to that yet. We don't know if we stay with what we have or we should change it. But we think the right thing to do is ask the question. They've also formed a consultative group, and they have 16 members. That one probably is more, it's probably more skewed towards the 16 members probably being more auditor focused and preparer focused, probably not as much user focused, just with the idea that the users don't tend to be in our COD on a daily basis where our preparers and auditors are. And so that probably is asking them more in terms of how, when they research standards, how do they do it? They've had multiple meetings now. Actually, they had the first one in June. I've had subsequent meetings since. And again, we're just continuing to research that and determine what we need to do with our authoritative structure, if anything. And so that project continues to move forward. The last thing on last slide is on master slide 52 is just where we are with our three PIRs. OPEB is making really good progress. We will be out of stage 2 at the end of this year. And that's really stage 3 becomes report writing. And so we're going to get out of stage 2 at the end of the year. We're making great progress on OPEB. And the fiduciary leases were issued much later than that, especially GASB 87 on leases. And we're still in the archival research and data gathering phase of that PIR process. And so I know the team's making really good progress on it, and we're gathering really good information, but we will still be doing that for, as you can see by the calendar here, we'll be doing that for a little while now into the future. But PR still is important to us, and we're still making good progress on it. And so with that, I will stop and ask if there's any questions.
Hey, Alan.
Yes, ma'am.
No question on these recent slides, but I wanted to go back to an original slide that Joel had talked about, the revenue and expense recognition project.
Yes,
Do
ma'am.
you all have a time frame? I know it's on a slower timeline now. It's very complex, and you want to be deliberative and think it through. And other projects have taken higher priority. What is the timeline, approximate timeline? Do you have a feel for that? I know it's a 7 to 9 year project.
It is, and the goal right now is to have at least one exposure draft. There may actually right now the top we're talking about is having 2 exposure drafts for the project, having one on, and Joel, please chime in on this if I say this wrong, but the idea would be having an exposure draft on what I would call the foundational concepts within RAR, and then all the Cat B literature, which is really the statement 33 revisions, and have that done before, I think right now would be early of 2027, and then come back and do an exposure draft on the Cat A part. Part of that is just Cat A is very complicated. It's basically lifting off of. It's primarily based on 606 in the FASB language of topic 606, and we're having to go through that, and we're having to go through all the words on that and apply it to the government environment. But we figured getting the ED out for the foundational things on what is Cat A, what is Cat B, how do you determine whether it's Cat A or Cat B, whether it has a performance obligation or not, and then all the stuff related to Category B guidance on grants and taxes and all the kind of things we think about. We want to get that out first, and so I think the current plan has that out in the first quarter of 2027. And I say all this a little bit careful about it, Manju, because you're asking a question right about the time before the board's about to make these decisions next board meeting.
Okay.
So, so I'm hedging a little bit, because at the next board meeting, we'll give them a tech plan, and when we give them the tech plan, it's going to have a more robust and more laid out calendar of where we think we're going to go. So I probably should stop there and let the board decide it, because I don't want to bias them.
Yes,
But
you're right.
we do acknowledge, and we do understand that having more of a long-term game plan and calendar for exactly when this is going to, progress is important, and we're giving them a revised version of that at the next board meeting.
Fair enough. Thank you.
Yes,
Any
ma'am.
other questions? I'm not seeing any hands. Oh,
Rick.
go ahead, Rick.
Looks like Rick.
Provide kudos to the group, to Joel and Alan on the public forums, as we talked about before, and I know you did too, Manju. Participated as an observer in one of the public forums, and I did on another one. And as they mentioned in the introductory comments, the structure of the project or the teams was mixed between users and practitioners and preparers, and well done. The group I sat as an observer for, excellent discussions, and so much so that Deborah Beams, who was the expert facilitator, had to kind of rein everybody in to keep them on track. But and the one thing I wanted to mention, the beauty of it is there certainly wasn't a groupthink, because it was refreshing to see. I don't know if it's refreshing, but very educational in their debate and discussion, and where there was disagreement in perspectives, which I know Joel has mentioned before. That's the whole idea, is to get the different perspectives from the different groups that are represented, and that's what ultimately comes up with better decisions. So I just want to give kudos to that and how you've structured those project or those public forums. Well done.
Thank you, sir. That was this project is the first time we've done this way, and so I think we've been really happy with the feedback, because so far everybody that's done this has said that it's a really good change in the process, and so we're really happy about that.
I echo what Rick said too. So thank you. Any other questions? Sounds like none. So thank you again to Joel and Alan for your excellent reports here. And our next item is report from FASB Chair Rich Jones. Rich, I'm going to turn it over to you.
Great. Thanks, Manju. Good morning,
you.
everyone. I wanted to spend the next a few minutes talking a little bit about some of our accomplishments through the second quarter of this year and up through the date of this meeting, and then also to give a little preview into some things to expect. What I'd like to start with is on slide 55 of your materials, and it effectively summarizes the progress on standard setting top priorities since July 22 agenda consultation. The one change I have to announce here is that the timing of the preparation of these slides, we still had our project on the accounting for environmental credits and expected to be completed. We actually completed our board redeliberations last week and voted to move forward with a final standard. That means that since the July 22 agenda consultation, we've completed projects or are in the process of publishing finalized documents on digital assets, income tax disclosures, segments, disaggregation of income statement expenses, definition of a derivative, government grants, software accounting, and I'll add to that list the accounting for environmental credits. That's quite a lot of standards. It's not all the standard setting we did, but these were the items that we heard consistently from our stakeholders were the top priorities. and we've delivered final standards on them. Just a couple other things on our environmental credit project. I'd emphasize that's a project on accounting for the flow of funds associated with purchasing and selling those credits. That's our mission, financial accounting and reporting, and we're narrowly focused on that. We don't make judgments about what those environmental credits do or don't do, nor do we have any role in the compliance programs that governmental entities set up to deal with those environmental credits. This is simply the flow of assets related to people's purchasing and sale of such credits. Couple other items that were priorities that came out of that 22 agenda consultation and status. During the fourth quarter of this year, we expect to bring back the stakeholder feedback related to financial KPIs and intangible assets for our board to consider the input from all of our stakeholders who took the time to weigh in on the invitations to comment on those topics. And I actually look forward to updating the Oversight Committee in the fourth quarter as to the results of that feedback and some of the discussions of our board. If you move on to slide 56, it provides an overview of our technical agenda as of June 30th. During the second quarter, we added a project to our agenda related to the measurement of paid-in-kind dividends on equity. We also finalized two projects related to determining, acquiring, the acquisition of a VIE and share-based consideration payable to a customer. And we also issued an exposure draft related to accounting for debt exchanges. The next few slides, I'm going to walk you through some of the stakeholder input we got related to the projects that were actually finalized during the quarter. So let me start with determining the acquire and the acquisition of a VIE. I know that's a mouthful. That's on slide 57. And if you think of it maybe high level, when you think about putting two entities together, very often we refer to that as a business combination. And we have guidance in our accounting for business combinations that says generally the buyer is the acquirer for accounting purposes. But sometimes there's transactions where they're structured, and it's really what would be the legal acquiree becomes the acquirer for accounting purposes. And why does that make sense? It makes sense because sometimes you may have a smaller shell type company that's doing the acquisition, but it's really what's being acquired is effectively the ongoing entity. And it's more relevant to users of financial statements to present them as the acquirer for accounting purposes. Well, that's in a business combination. Other ways you can put entities together is you can have one entity consolidate another entity. And we have actually specific guidance called related to variable interest entities for entities that are where there's a little less substantive control through ownership interests in the entity. And those of you who've been around for a while remember this came out in the post-Enron standard setting, effectively as a way to avoid certain structured transactions. Well, in that guidance, we said that the party that's consolidating the variable interest entity is always the acquirer. That's different than what we said for the business combinations. And our stakeholders pointed out that you could actually get different answers for economically similar transactions because we had differences in that guidance. This was an issue that was originally raised by our newly reconstituted EITF. It's an issue that the EITF recommended not only that we take on the issue, but a proposed solution. Our board added it to the agenda. We went through our full due process. And not surprisingly, with an issue like this, we got a lot more interest from practitioners because those were the people seeing that. I don't know how many people on the screen had seen this issue before or knew they saw a financial statement of this issue before. You may not have, not unless you maybe saw one of the SPAC transactions a few years ago. So it's not unusual that this gets raised by practitioners as they go through and they look at inconsistencies in the accounting for economically similar transactions. So we looked at it, we finalized it, we've provided a summary on slide, I guess it is 57 of the different input that we got, making sure that, and we've moved forward with that standard setting. If you move on to slide 58, 58 also talks about classification of share-based consideration payable to a customer. Again, this is an issue that is generally identified by practitioners, but we did significant outreach with multiple advisory groups and over 68 stakeholders in total. And once again, decided to move forward with this. And again, this was another area where there was diversity in practice for the underlying accounting. It may not have been apparent to investors, but it didn't make sense to have different accounting for those economically similar transactions. If you move on to the next slide, this next slide is also an issue from the EITF, accounting for debt exchanges. And I mentioned we issued an exposure draft in the second quarter. And this was where, when you think about someone who has debt outstanding, if they replace that debt, they're either going to account for it as a modification of the debt instrument or the cancellation of the original debt and issuance of new debt. And that accounting analysis gets fairly complex. And particularly if you start talking to some of the private companies or the companies that are thinking of going public, performing that analysis was often challenging. And if you think about public companies with wide dispersion of their debt, there was some hangups in understanding exactly who the holders of that debt were. And again, this came back to substance over form. What really should be the economics of that accounting? When should the replacement of one piece of debt with another piece of debt be viewed as the extinguishment of debt and the issuance of new debt, which could have a gain or loss, versus simply a refinancing of that debt? Our comment deadline was May 30th. We'll be bringing this back in front of our board for redeliberation shortly. But again, I look forward to hopefully wrapping this project up again before the end of the year. If you move on to slide 60, slide 60 really just gives you an overview of different projects that we have and what we expect to have happen through the rest of the year. So there's projects where a final ASU has already been issued after June 30th, such as credit losses on topic 606 receivables. Projects where initial deliberations have been completed subsequent to June 30th, such as measurement of paid-in-kind dividends on equity classified preferred stock. There's projects where redeliberations have been completed and the board has voted to move forward with a final standard, some of which will come out in the third quarter and some in the fourth quarter. So moving to the next slide. The next slide provides an overview of where our technical agenda was at June 30th, but let me give you some context about where we stand today. There are 11 projects on our technical agenda today. 8 of those, our board has moved to final standards, meaning the board has majority of the board has voted to move to proceed, and we're in the process of finalizing those final standards. One of our projects is in redeliberations, and one of our projects is in the exposure draft phase, and one project is in initial deliberations. That's 11 projects in total. So I think I've said to this committee before, I reasonably expect substantially all the projects on our technical agenda to be completed before year end. That's what you're seeing progress. So next question is probably, well, hey, Rich, what's next, right? You're going to wrap up all your standard setting that this FASB is done? No, we're effectively in the process, and you move to slide 62, and you'll see that we have research projects listed as number 1. And as of June 30th, there were 8 research projects on our research agenda. There's now 9. One of those research projects is our 2025 agenda outreach. This is where we did outreach to all of our constituents. We did outreach with 200 to populate a document. We issued a document for public exposure, and I'm happy to say that we've got 99 written responses to date. To give you some context, back in 2016, when we did agenda outreach, we had less than half that number of respondents, and that's only written respondents. So we're increasing the feedback that we're getting from stakeholders. And I will tell you that when you start going through those 99 responses, you will see they are very robust. So our staff's in the process of going through those 99 responses, doing additional outreach with stakeholders, particularly stakeholders that don't write written comment letters. And I think we've talked before, investors tend not to write written comment letters. So we have outreach not only with our investor advisory committee, but with different investor contacts that we have across the investor class. That feedback will begin to come back to the board starting in October of this year. And between October of this year and sometime summer of next year, I expect that you will see us with a repopulated technical agenda and a path forward on it. In addition to that individual research project, though, on the agenda outreach, there are 7 or 8 other projects on the research agenda today, 7 other at June 30th, including the invitations to comment related to financial KPIs and accounting for intangibles. So those are also items where our staff is performing additional outreach to understand, is there a project there for our board to pursue? And if so, what are some different solutions that our board can consider if they're interested in pursuing that project? The Private Company Council, I won't steal Sue Cosper's thunder. She'll be covering that after my presentation. But I did want to talk about the EITF a little bit, because 2 of the projects that I summarized earlier did originate with the EITF. The EITF has been busy. They've been identifying issues. They've been proposing them, discussing them in their public EITF meetings, and proposing recommended projects and solutions to the board. It's been extremely helpful. There are issues already that we're addressing that I don't know that we would have known about had the EITF not been raising them. So they're raising them timely, and they're proposing solutions that help improve financial accounting and reporting. And then finally, on those other projects, you'll see post-implementation reviews. We have 2, and that moves you on to the next slide, post-implementation review projects in process. We have 1 related to credit losses and 1 related to leases. Let me start with the second one. So our leases post-implementation review, we have a roundtable scheduled in September of this year, where we're going to bring in constituents from investors, preparers, practitioners, large firms, small firms, to share with us their perspectives on the lease accounting standard. What went well, what could be improved, not only from that standards perspective, but also generally, how could we improve standard setting going forward to the extent we tackle a similar project in the future. Our tentative timing for the leases post-implementation review is to wrap it up towards the end of this year. The credit losses standard, it's a little behind that. We're in the process of working through that post-implementation review and including getting needed feedback from banking regulators, who are one of the primary users of credit loss information, to understand what information they've found from that standard, what changes they've had to make in their regulatory approach based on that standard, or they're planning to make on a go-forward basis. The credit loss standard post-implementation review, we expect to wrap up sometime next year. So you'll see similar outreach with on that standard with roundtables sometime in the next calendar year. So with that, just before I wrap up, just from a focus area perspective, we are continuing to focus solely on our mission, which is financial accounting and reporting. We do what you might call it stick to your knitting, but we do one thing and one thing well, which is financial accounting and reporting, and that's what we're focused on. From a communication perspective, I think one of the successes from our prior agenda outreach, and one that we hope to mirror in the current agenda outreach, is the participation of our stakeholders in the process. It helps us set the right agenda. The right outreach also helps us come up with the right answers to the problems that we're pursuing on a timely basis. And that's one we've been focused on. And then finally, I would just once again add, our success as a standard setter is based upon having our stakeholders involved in our process. So anyone listening to this, if you want to be involved in our process, we have an open door, and we're certainly happy to invite you in. You don't have to be a technical accountant. We're happy to talk to you in your terms and how you're using financial information to allocate capital or any improvements that you see that could be made in our environment. So with that, Manju, that wrapped up my prepared remarks. I don't know if there was anything that I could answer for the committee. I see.
Thank you, Rich. I see a hand, Paul.
Yeah, thanks, Rich. It's a very comprehensive review. Can you just maybe comment a little bit on the post-implementation reviews? When do you decide to do them? What's the process that you go through for deciding when to go through a review like that?
Yeah, so it tends to be a major standard. That's one of the first things. And the other is, if we start it soon after a standards issue, because the initial phase of a post-implementation review is making sure that people can adopt the standard that we have just issued. And that decision, not only a major standard, it's also feedback that we're hearing from our stakeholders, because we get a pretty good idea when we first issue a standard. Are there likely to be implementation issues? Also, to the extent that, say, there was stakeholder group concerns about certain aspects of a standard, that could also factor in to adding a project to post-implementation review. The other thing I would say that we would consider is not only improvements to the standard and understanding what did we do well with that standard setting and what do we need to change related to that particular standard, it's when are we apt to get lessons learned for a future standard. So I'll give you an example. We had revenue recognition leases and credit losses were all post-implementation review projects. And in two of the three, what became evident was that we needed to more carefully consider the interaction with business combinations. And so even though we may not have finalized those PIRs at the time, that was a lesson that the board learned, that every time we're doing a new standard, we have to pause before the end and say, okay, this has to interact with a business combination. Do we have the right answer? Have we thought through those issues? And if you look at our standards on environmental credit programs, if you look at our standard on government grants, both of those, we spent significant board time understanding the interaction with business combinations and actually specifically addressing it, as opposed to issuing those standards and figuring out we needed to do it afterwards. So I'd say that was a great lesson learned from it. And that would also be one of the factors influencing our selection for a post-implementation review.
Good, thank you.
Rich, I have a question.
Yes, Mike.
You talked about the PIR for leases.
Yeah.
So the roundtable that you referred to upcoming in September, was there another process to seek feedback from stakeholders on that particular, a formal process to seek feedback from stakeholders with regards to that leasing standard?
Sure. So multiple. So it's been part of our outreach with all of our stakeholders ever since it's been issued. And in fact, we, as a board, we've issued numerous we've done numerous subsequent standard setting to help with implementation, whether private company focused or all entities focused. The other thing is it's a recurring topic of discussion with all of our advisory councils. And Sue can certainly attest that it's certainly in the private company community, it has also been a significant topic of discussion. So our invitation is really to everyone at all times to give us feedback on that or any other standard. But we've actually put it on the agenda of almost, I'd say, every advisory group meeting and almost every outgroup meeting we've had since its issuance as ways of raising issues. Because to be fair, if there's standard setting we need to do, we'll do it, right? We need to understand it to focus on it. But by the same instance, I personally think one of the most important parts of PIR is the lessons you learn for the next standard you set.
Thank you.
Rick?
Rick, go ahead.
Thanks. And Rich, you mentioned the agenda consultation, and I know it just completed. I think it's finally closed, and you got 99 responses, which is a testament, I think, to the outreach that you guys are doing, to try to ask those who are interested to provide input, because that's how you get the benefit. So well done with that. I'm going to ask an unfair question. And is there anything in general that your staff, as they're accumulating this, because I know we'll talk more about it the next quarter, but is there anything that the staff, that as they're starting to go through and accumulate and get information to present to the board on themes, where they've mentioned to you, wow, that something came out of this that we didn't expect to be an issue, and apparently it is. I mean, is there anything, knowing that it's you just closed the door on the thing and haven't summarized it yet, that surprised you?
So our staff's not done, and to be fair, they haven't presented it to me, so I can't speak for them, but I will tell you, So I'll start with the outreach we did with the 200 people to populate the document. And some of what you hear, you kind of expect to hear. But I will tell you, there was always something surprising, right? And I think that's one of the great things about doing open-ended outreach is you ask people what their priority is and what they think you should work on. And we do hear new things. We do hear different things. And sometimes you're surprised who it is, right? It might be the preparer saying, hey, I think you should have more disclosure about this, right? Well, some people think there's a bias there that preparers say, no, I don't want to do more disclosure. Well, no, that's not the case. If there's things that they think are informative to their investors and those they work with in the capital markets, they certainly want transparency around it. That we saw that in segments, for example, on multiple measures of segment profitability. So, and by the same instance, investors who may say, hey, I don't know why you need that, right? We don't use it, and that's not necessarily informative to us, right? So I think you can always be surprised. I think the key is going into it with an open mind, with open questions, and being willing to listen to the answers. So there will be some surprises in there for some people. And I look forward to talking about all that feedback in public.
Right, I don't see any other hand up for questions. Thank you for that very comprehensive report. FASB's been very busy churning out standards and PIR and other research projects that you've undertaken. All right, so with that, our next item is FASB Liaison to PCC, Sue Cosper. Sue, take it away.
Thanks, Manju. So good afternoon, everyone. Can say afternoon, it's 9 minutes after noon, so I think that qualifies. Our last PCC meeting was held on June 26th and 27th. The PCC Liaison Report is in your materials. It's beginning on page 65. There's an agenda and a meeting recap included in there as well, which begins on page 113. So the PCC had a productive meeting in June with active engagement and dialogue among the PCC members and the FASB members. Maybe just a few highlights from the meeting. The PCC discussed the research associated with further refining their agenda priorities. They're continuing to pursue research on the application of lease accounting, subjective acceleration clauses and debt arrangements, and the interest method of accounting. And maybe just a comment on lease accounting, since Manju, you had asked a question on that. I think, the PCC has a leasing working group, and it's interesting because I think it's useful because I think the leasing working group actually is informative to the leasing PIR group at the FASB, and the leasing PIR group at FASB is informative to the PCC's leasing working group. So I think it's been mutually beneficial. In terms of some of the research that they're discontinuing, they decided at the June meeting to discontinue research on short cycle manufacturing arrangements and on the weighted average disclosure simplifications they were considering. In both instances, they cited pervasiveness of the issue as well as the cost to change versus the perceived benefits of change. At the June meeting, the PCC also discussed the FASB's agenda consultation, the invitation to comment that Rich was just speaking about. And they provided their recommendations on future projects that the FASB should consider prioritizing. They also discussed recent activities on a variety of other FASB projects and initiatives, including the accounting and disclosure for software costs and government grants, among other topics. Maybe just to mention town halls, liaison meetings, and other activities. In June, we hosted a town hall in conjunction with the AICPA Engage conference. It's one that we do every single year. It's the prominent private company practitioner focused conference. From the PCC, Jerry Shaver, Holly Nelson, and David Finkelstein participated in a panel style presentation, very interactive with the audience. Myself and Vice Chair Hillary Salo also participated in that town hall. And in addition, we presented an educational update with the FASB staff immediately preceding that town hall. And it was really well attended. Maybe just a couple of other things. We hosted a webinar for private companies and not-for-profit entities on May 29th. Adam Roark from the PCC presented along with Fred Cannon, Christine Bodison, and the FASB staff. Our next PCC meeting will be held in Norwalk on September 25th and 26th. It will also include the PCC's annual in-person liaison meeting with the AICPA's Technical Issues Committee. And with that, I guess I will pause here for any questions.
I don't see any hands up. Thank you, Sue. Thank you for that excellent report. I'll ask Trustee Rick Reisig now to give us his observations, share his observations of the PCC meeting from June 26th and 27th.
Yeah.
Rick?
Yep. Thanks, Manju. Sue did a great job summarizing the meeting. As always, I'll just try to provide some perspective just from watching and not the technical part of it. Obviously, great discussions were had, great meetings always, and this one was no exception. Just as I like to do, point out some kudos to some folks, and certainly to Sue and then Jerry Shaver, who's the chairman of the PCC. There was certain times, and usually in any of the topics, the group that they have composed is usually pretty willing to jump in the pool and swim and join the conversation. When there is somewhat of a lull, Sue did a great job, as does Jerry, in asking a question directly of a participant to get the juices flowing. And once one of them starts off, that usually gets the discussion for all the rest. And there was one of the topics that, and really, I think it was on the, might have been the agenda consultation, where FASB wants the PCC's feedback on, are they asking the right things, and what should they be focusing on? And that in particular was one where Jerry and Sue kind of primed the pump for the participants. And I thought that was an excellent way to go there. They had a great public discussion, just like any other committee. They'll have a session earlier. This is more administrative, that's closed, and then they get in the open session. And sometimes the open session, there's always a fear that some of the discussion could be inhibited. Not this time, and usually not at all on any of the meetings, but it certainly wasn't this time either. They had a great public session. So if any of you are out there that are interested in what's going on with the public company standards and what's happening with a private company, or private company issues and private company council discussions, join the open session, because they're very robust and excellent discussions were had. Interesting topic. They talked about subjective acceleration clauses, and as an observer, I'm sitting along the side and watching it. And at the break, I went up to Sue. I said, Sue, I think I was on the PCC when we talked about this. And she said, yeah, I know you were. I didn't want to throw you under the bus, and which I appreciated that. But I knew that there was two other people. There was Sue and then Christine Bodison, who were in the discussion when the PCC last talked about this issue. And I bring that up because of, just to highlight the difficulty or the challenge, let me put it that way, the challenge of the staff and even the FASB as members of the FASB cycle through, and in this case, members of the PCC cycle through, sometimes those topics come around again, right? I mean, because we talked about that in 2017. Well, here it is, 2025, and we're talking about it again. And it's the information that the staff goes through to put together the discussion memos. And in this particular one, the history that they presented to the current membership of the PCC on what was discussed before and what was the decisions that were reached before, and I think it gives them excellent background on how they should proceed, if they should proceed with a particular topic now. And I think it was Rich who said, hey, look, once we talk about something, the issue or the research doesn't go away, and this is why. Is because sometimes it's looked back on again and refreshes everybody's memory, and it's not valid to go forward again, but it helps provide some perspective. And then lastly, I just wanted to shout out to Emily Knievel. I don't know if that was the right pronunciation of her name, but I always want to highlight the staff who did a good job at presenting the topic. They always have a staff member who introduces the topic. And she was particularly excited to do so, which I think is great. It's such a learning atmosphere that FASB provides for the staff. And obviously, this is a great learning experience for her, and she took it under her wing and did a great job with it. So that's all I had on my observation. Thanks, Maju.
Rick, let me, and now we'll move on to our final item, which is report from other trustees who have observed other meetings of one of the groups, FASB, GASB, GASAC. So I'm going to first turn it over to, let's see, Trustees Brett Pat and Beth Pierce, who observed FASAC meeting on June 5th. Brett, why don't I start with you? Do you want us to kick us off?
Great. Thank you, Manju. Appreciate it. And like you mentioned, I attended the FASAC meeting on June 5th, and it was interesting for me. I'm a prior FASAC member, so it was, interesting perspective for me, as I observed, the discussions that took place. So my observations were there was certainly a high level of member engagement, lots of very good discussion. I thought it was constructive, good deliberation back and forth amongst the members. And in particular, and this has been mentioned, Ricky mentioned that just the work that the FASB staff did was really good. There's a lot that goes into, I recognize, in preparing for the meetings and running the meetings, and just the technical in-depth knowledge you have to have that constructive dialogue that I mentioned. So that certainly wasn't lost on me. It's just the great work of course, the board, but in particular the FASB staff. So just wanted to make sure that mention that very, very impressive group of individuals. What I've always liked about the FASAC meetings, and this was the case when I was a member, and I'm glad to see that it continues to be the case, is that there's this integration of the broad discussion that happens, around the table, but that's intertwined with breakout sessions. And I think that's a really good approach where you can get a fulsome dialogue, because these topics are detailed and there are different vantage points that the different stakeholders bring in. And so being able to have a more intimate dialogue and bring those observations back to the broader discussion with all the FASAC members and the FASB staff and board, I think that's really, really helpful. I found it extremely helpful when I was a member, and noted it to be the case. So it's efficient, it's effective, it leads to just a good discussion. So overall, great approach. The atmosphere is what I recalled, and so it was great to see that the collegiality that I remembered was very much still in place, and good forum to really good broad stakeholder input. So I thought it was very valuable and well done.
Thank you, Pratt. Must have been an interesting reunion with lots of your colleagues from FASAC.
That's right. It was.
Yeah. I'm going to turn it over to Beth.
Oh, thank you. I'm not going to repeat all of the comments that were just made. I agree with them. I think it was a very thoughtful meeting. They had some very tough subjects, private credit and debt disclosure and a number of other things. What I did like the breakout sessions, and I think that the comments that were just made are right on that. They were able to delve into issues, more complex issues, than they would be if they were just in a large group having that discussion. So I think it's a great way to do that. Have the delve into it, look at the complexities, then come back as a group, and I think it's more informative that way. I would agree that their deliberations are thoughtful. And that the members are subject matter experts. There's no ifs and buts about it. They know what they're talking about. And I just also want to commend the work of the chair, Mike Morrow, and what he does. And also, again, as we just talked about it, and Rick mentioned it with PCC, the quality of the of the materials that are presented by staff. They're thorough, you can understand them, and they're right on in terms of the issues. So all in all, a very good meeting and effective, and a great way of getting stakeholder input to FASB.
Mhm. Thank you for that report, Beth. Beth, I understand in addition to the FASAC meeting, you also observed the FASB meeting around the same time frame. Do you mind giving us your observations of that meeting?
Certainly. I had the opportunity to observe the FASB meeting on June 18th. It was focused on one agenda item, which was the interim financial reporting, technical part of it, topic 270. This was a very robust discussion. There were many divergent views. The members were very respectful of each other in that process, and they worked productively to hone in on the issues and move the project forward. I think that that's very important, that we see that projects are moving forward, and that the result of the decisions made ended up with FASB taking a vote and directing staff to draft a final accounting standards update for that particular project. I'm going to end with a quote from one of the members, and this was at a point where he disagreed with something, but what he said was that it took, referring to staff, it took the methodology presented by the board and this is again referring to staff, and did I'm going to have to read, an incredible amount of work to apply that methodology. And I think that's a compliment to the way that divergent views are brought together, and people work together to find a solution, and there's a discipline to the process. And I would say the same type of discipline exists with the FASB board itself. They are meeting the objectives in terms of excellence in financial reporting and moving forward in disclosure. And that would conclude my report.
Thank you. All right. Next we have trustees Marion G. and myself, and perhaps Beth Fears. Beth, I'm not sure if you were able to, I know you planned to observe the GASAC meeting, but were you able to
Yes,
observe that?
I did so remotely.
Okay, great. So I'll start off with Marion G first. Marion?
Thank you, Manju. So as you pointed out, I did have an opportunity to observe the July 28th GASAC meeting. For those that are online and may not be aware, GASAC provides a forum for GASB to hear diverse views on a wide range of issues from individuals representing approximately 30 stakeholder organizations. During this particular meeting, the GASAC members were asked to provide feedback on emerging practice issues, subsequent event disclosures, the revenue and expense recognition, and infrastructure asset projects. I thought there was good communication from the GASAC members, and I felt that they effectively communicated their views. The one thing that I was pleased to hear was the different perspectives that were provided, which I think led to a more robust discussion. The GASB members that attended the meeting, they actively sought feedback, and they listened to the viewpoints of the council members. I thought that the GASAC chairman, Rob Hamilton, did a good job of ensuring that the committee stayed on topic and effectively addressed those items on the agenda. I also want to give a kudos to the GASB staff. I thought they did an excellent job with the preparation of the materials that were needed to conduct the meeting. So in general, I thought that it was a well-ran meeting.
Thank you, Marion. Beth, I'm going to ask you to give your observations of both GASAC, and I believe you may have observed the roundtable too, the GASB roundtable.
Sure. As it was just pointed out, the meeting was on the 28th. I won't repeat, I agree. Professional, thorough, collegial, all of those words describe what I saw and observed in that meeting. I was especially impressed with one agenda item, which is called emerging issues. And that's kind of a free form process where members can bring up just about anything that their stakeholders are concerned about. And usually this is generated by member organizations talking to their representative on GASAC and just bring forth those concerns, and they can be concerns about the industry. They can be concerns about new issues coming up, the particular climate in terms of government and the resources, for instance, or it can be particular issues that with standards. 7 different individuals brought something to the meeting on those, and some of them, many of them. So you had well over a dozen different concerns that were brought forward. People listened. The GASB staff listened. The chair and the director technical services took those comments seriously, and I think it's a great way of not just getting GASAC involved, but getting their member organizations involved by being able to bring that forward and see some results from that, and they are taken seriously. The next day, I believe, the 29th, there was a GASB public forum, and the forum dealt with a particular item, the preliminary reviews, severe financial stress and probable dissolution disclosures. Again, I think this was a different format than they've done in the past to solicit input. It was very, very successful. Several members of GASAC participated in that meeting as well, and it would be a series of questions and then responses from folks. I don't think we got or they got to the end of the questions, which was okay because they had considerable amount of give and take and discussion in the process. And this is a very severe financial stress is a very hot topic in the discussions at both GASAC and at GASB. So it was a good timing and great input and a new approach. And I want to thank Joel and company for their innovation to find ways to get more public comment and input into the process.
Thank you, Beth, and kudos to you for observing both FASAC, FASB, GASAC, and GASB meetings in back-to-back months. We appreciate your observations, and the board does too. I will wrap it up. I too had the opportunity to observe 3 days of meetings of GASAC, the GASB roundtable, and the GASB meeting itself. And I want to repeat what my fellow colleagues, trustees have mentioned about their observations. I agree with them all. Again, just very substantive discussions. One thing I'll note is that GASAC added 3 new stakeholder organizations, very thoughtfully. And I was just so amazed and impressed that the brand new organization representatives were prepared, they were immersed in the subject matter and were, observing and making comments. They had very substantive and deep discussions on topics. GASB board members seemed very engaged and asked questions, and folks sometimes asked each other questions too, which was helpful in clarifying if you have a different perspective, and a preparer group might say something, but the investor group or the user group feels like, wait a minute, I don't understand that. Can you clarify? So very collegial, very good feedback that was provided to GASB. And it was just so nice to see when GASB took those topics under consideration, the members in their deliberations, raise those points like, wait a minute, like this group said this and this group said this. So let's talk about that, how we take that into consideration as we kind of try to finalize whatever topic that they were working on. And the forum itself was just, a very nice format. I think Alan mentioned in his presentation, I think they took like almost an hour on that one issue of whether to use the going concern as a term or to use different terms, which is probable dissolution and severe financial stress. It was very interesting discussion. Again, very collegial, but sometimes very different perspectives. Sometimes, just very bold and different perspectives. But no one was taking offense, and people were working and asking questions, trying to work through. As usual, the staff for all three groups did an excellent job. They were always prepared with their research whenever anybody had questions to answer them. And with that, I think our agenda is complete for today. And I want to thank everyone. And let me just... We've now reached the end of our public session of the FASB Standard Setting Process Oversight Committee meeting, and many thanks to those who have joined us today. Our next meeting is scheduled for Monday, November 17th, and I hope all of you will join us again in November, and hope we can have more participants join us, more stakeholder participants join us. And I want to thank everyone, the committee members, the stakeholder attendees who've joined, and the staff for today's meeting. Thank you and have a great day.